Emotional damage.
Don't know what the fuck they're doing.
Good morning, everyone, and welcome to the Morning Market Report. I'm Army Piper, and this is the Piper Academy Network. These are red bubbles. I have red balls all around me. Guys, market sell-off is happening today. We're going to break down some stuff. It's Jackson Hole Symposium. Everyone's waiting to see what happens with that. Plus, today we're going to get FOMC minutes. What does that mean for the markets? Top it off, we talked about it earlier this week. There was this money flow POC, $70,000 is a target, and that was put out by one of the analysts from over at Chart Prime. We showed it on the chart from the algorithmic indicators from Chart Prime. It is a money flow point of control, and now I'm starting to see it in some other places. We're going to take a look at that MVRV today. It is one of the support levels on there, guys. Strap in. Strap in, because this roller coaster is rolling downward with lower lows and lower highs, guys. We're going to break it all down for you. And what can we expect from the Jackson Hole Symposium on Bitcoin price? Got a little insight on that from some analysts over at the Banter Crew. So, guys, take your seats, get your notebooks out. You guys know what time it is. Class is in session. Let's get it. Good morning, everyone, and welcome to the Morning Market Report. I got the strange black line going right down the middle there. There we go. Fixed it. Guys, welcome and good morning. Welcome to the show. Appreciate everyone joining us here this morning. Always a pleasure to have the alumni join us here. And we got a new member this morning. Shout out to Gindles. Welcome to the alumni. Make sure you connect over in our Discord. Go to our Discord, connect your YouTube. Make sure you have the same email for your Discord and YouTube, and you'll get access to everything we do over there. The trade setups, the DCA Piper plan, all the insight, the weekly class, everything. So welcome to the alumni, and welcome all of the alumni in the chat. But more importantly, welcome to my co-host, OC Guy. Let's go ahead and get him up here. The wonderful Mexican Superman, Lord of Spaghetti. What's up, bro? How you doing today, man?
Doing fantastic today. Welcome with Cooking with OC. Today we're going to be taking a look at my favorite recipe. First, you need a lot of ice. Then you need a fantastic espresso. You just pour it in here. Look at that, man. And finally, just to top it off.
Yeah, I swear to God, if you put orange juice in it, dude, get out of here. Get it. And that does it for OC. This man, this dude, it is OJ and coffee. Hey, you know what? Thank God you're good at charting, because you're not good at coffee making, okay?
You haven't tried my coffee.
Lord.
You haven't tried my coffee.
I'll stick with my Nespresso and enjoy that. So look, Doom, it's the Doom emotion. We're all doomed emotion from what is that name of that show? What is the name of that movie that all the feelings and emotions in the human brain?
Oh yeah. That is, honey, what is the name of the movie that you like? The one that is inside of a girl's head and there is emotion balls and stuff like that? Inside Out.
Inside Out, that's it. There we go. She gets the pay today. There you go. So all right, OC. We got a lot to break down today, man. Just looking through my stuff here. We're in neutral on fear and greed. Okay, I'm not pulling up on the screen. I'm just giving you a heads up. We got the 5 top things you need to know today. 5 things you should know today. We're also going to talk about the altcoin season, where we are in the index with that. We're going to take a look at a couple of articles. One has to do with Bitcoin and Ether ETFs, about $1 billion in outflows. Wow. Ouch. We're going to talk about Bitcoin sell pressure and Bitcoin bid support stacks about a 105 range, 105K. So we're going to talk about that today. We're going to talk about how the analysts over at Banter Crew are looking at the Bitcoin being affected by the Jackson Hole Symposium. They went back and looked at 8 years of data on how the Jackson Hole Symposium has affected Bitcoin. So we'll talk about that today, hawkish versus dovish. And then lastly, we're going to talk about that $70,000 mark. that POC, that money flow POC, actually coming up in some headlines, man. So the best support level ahead, it will Bitcoin drop to 70K. So we're going to talk about that today also. But right now, let's talk about what's going on the Bitcoin chart. So, hey, shout out to Crypto Coin. Actually, let's jump over here. Let's give a shout out to the chat, man. Because you know Dinero's in here with us. Crypto Coin Mindset Keith. We're redirected to him today. Lunar Beach's Crypto LBC in the house. Inside Out. My son loves that movie. I love that movie. Inside Out and Inside Out 2 are really good. All the emotions when they got trapped in the jar, aka bottled up emotions. I love that. That was so funny, so clever. Anyway, Crypto Trades in here with us, joining us. Harp, Chris writes, appreciate you, man. Gendels, our newest member, appreciate you being here and joining today. Shubby751, we got Dylan BA in here. Mike Play has joined us also, appreciate that. And Robert Mulligan, and of course, BC Port Corp, the host of Good Morning Crypto right here on the Piper Academy show. He was on this morning again. If you're not first, you're last, he said, and he is first here on the broadcast lineup every day. OC, let's go ahead and, Trade Intuition's here too. Shout out to T.A. Joe. He's going to be on there with Crypto Coin Mindset with Keith today. So, and Bedredden joining, sliding in at the end, going, yo, what's up, Bedredden? All right, OC. Bitcoin chart, where we at? What's going on right now, bro? Let's kick it over to you. Let's get that data out here.
Perfect. So looking at Bitcoin chart, we should be already into a trade. Yesterday, we were talking about this possible entry right here. We had our breakout. It's not about a breakout, it's about a retest. So long times without saying that.
The OC retest.
I love it. And there we go. Look at that beautiful breakout. Big body candle going to our area of support right here. And remember that we re-added this box out of our VRVP smart money entry right there, bouncing from that area, going to the top once again, bouncing off dynamic reactor, also out of another smart money entry zone. Look at that, beautiful. And then going into the red box right here where a bunch of resistance is, right? So following with this, let's go over where we were exactly yesterday. We were somewhere around this candle right here coming downwards, bouncing off, coming back up in here, right? So we saw this playing out, and well, then continuing downwards. What is the target right now? Well, we've been talking about this target, and let me remind you really quickly. Let me give you an espresso class of a range, right? It doesn't matter if it's a upwards range, a sideways range, or a downwards range, or even a collapsing range, right? Which is a triangle. If you have a price action going nuts, like making a fake out, right? And then comes back down and closes back inside the range, the possibilities for the price action to hit the other side of that range, they go parabolic, right? So they increase ginormously. So right now, seeing at that bottom of the price, and then just for curiosity, if you guys were wondering if we have that fake out and triangle, the same thing happens. The chances of hitting that bottom triangle goes parabolic, right? So let me just clear this up so we don't have added spaghetti from other days, because old spaghetti doesn't always taste great. So talking about that, basically the bottom of that range, it is right here at the bottom of my red candle. Not only that, yesterday we set up an alert, a support at 100, 111, so 111,900K. And of course, we were looking at the bottom of the range. We have the top and then the bottom of the range, this line in here. Let me zoom out so you can see it. This one in here, all right, right there, somewhere around the 110K. Remember, we've been talking about that, and most recently, the 100, the 107, and also the 100K has been lately coming up to float. And that is because we're coming down, right? This is not new. Remember, we've been talking about those areas still here, 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 and here. Just so we can also remember, right there, I told you, well, if we come back down and we bounce off this area, well, we're going to be just ruling out the 100K targets. But if we start breaking back inside of that range, I think we're still in that realm of possibilities. So far, so good. Nothing major has happened. We're still in the same zone each that we are thinking. And our next possible long entry, it's going to be right. Let me bring this up. There we go. Right here, very close where we are right now. And the only thing that we need to do is start to pushing upwards in here and have, look at that money flow. It's so flat, man. So flat. So the only thing that we need to do, it is just push that money flow up and then start breaking through that zero line. Quote unquote, the only thing, right? But other than that, we're doing great.
Cool. Yeah, it's just these lower lows and lower highs are telling a story, man. You just got to pay attention to them. So, shout out to everyone that's just sliding back in here. K Diggity joined us here. I see that. JR, good morning, bro. If you guys are catching JR's trades over in our Discord, you guys are missing out on some great calls. Dude is crushing it over there. I think he had a trade the other day. It was like 1,000+%. It was pretty nuts. Little Fish, see you there. Appreciate you, man. Let's go jump into the news. Let's start getting through this. We got a lot of stuff to unravel and unpack today on you guys. DDT, he's doing things. He's lurking. That's what he's doing. Darren does lurking. That's he's in the house. And Dutchy also. Good afternoon from the Netherlands. Appreciate you being here, Dutchy. All right, news time. Let's go there. Let's go there and talk about the news, guys. Looking at the metrics here and Into the Cryptoverse. Currently, right now, on-chain metrics sitting at 52.7% wristband in the neutral. Price is sitting at 43.5. It's pulling back a little bit here on its risk levels, and then overall, the summary sitting at 0.321. Again, they took out that whole metric that we were watching on social. Like it's at zero, so it's not even in the mix right now. Social metrics meaning kind of activity on social media, stuff like that, sitting at zero. Right now, the crypto market cap total is at $3.79 trillion. The trend on this is sitting at $4.232 trillion. That's that red line, that diagonal red line. That is the median average of the crypto market cap based on growth projections. And currently, we are right now 10.43% undervalued from the fair value of the crypto market cap total. Let's look at Bitcoin. I just want to look at the Bitcoin bands. Bitcoin bands, logarithmic regression bands, we're sitting down in the lower green band. We haven't even broke out of it yet. Typically, we break above these and then hit up into the risk levels, right, of the bands. Yeah, overall, not really seeing that. Check it out. Look, typically we come out of that cycle and then do the run up, right? Out of the green into the run up. Look, guys, we've stayed in the green band this entire time of this cycle. So pretty interesting to see that there. That we haven't even gone into a parabolic run up for Bitcoin. Looking at the crypto risk levels right now, we're at 53.8%. What does this have to do with? Gindles, if you don't know, this has to do with the dollar cost averaging Piper plan. And we multiply our weekly DCA by 1, 2, 3, whatever, based on wristbands. Right now, we're at 53.8%. That's a 2 times your DCA for this week. Guys, if we break down to 0.4999, we go into times 3 DCA. And if you look at history here, if you look at these times when we pull back into this light green, those were great times to be buying. And that is the risk band 4, which would be a 3 times DCA. So it's all broke down in there. We talk about it on the Monday classes, the Piper plan. We also take profits when it hits these 70% risk bands, and that gives us an opportunity to grab our money and run, because it's not about making money, it's about keeping money. So, hey, why is Optery in front of my head? I got to fix that later on. Okay, I just looked up and saw that, like, what the hell? All right, let's go talk about the Fear and Greed Index right now, guys. Fear and greed on Bitcoin sitting at 44. We're at a neutral state right now. On Ethereum, we're sitting at a 47, also out of greed and into a neutral state. I got a lot of other things on X marks the spot. We'll talk about those in a little while. One of them, though, Jackson Hole, shout out to FT White, first of all. Jackson Hole's summit this week with Jerome Powell. Fed Chair Powell's Jackson Hole speech could jolt markets. Evercore warns of a 15% drop. And it depends on if we get hawkish or dovish, honestly. And that's what that whole breakdown we're going to talk about here in a little while is. Bitcoin trend line, guys, looking at this chart here on the weekly, there's a nice trend. We just hit it and rejected off of it again recently. Maybe OC can pull that up and talk about this bearish divergence that keeps printing along with this run of Bitcoin on the weekly. It's pretty interesting. But RSI sitting here with the divergences yet again. And is this going to give another run up on the RSI? Are we going to see a rejection off of this trend line? Maybe OC can prep that on his chart. That would be great. That's on a weekly Bitcoin chart, OC. Let's go talk about what we're seeing over here on the liquidations for the past 24 hours. In the past 24 hours, 131,517 traders got liquidated. Total liquidations coming in just under $500 million, $481.8 million. Largest single liquidation happened on Binance. It was a Bitcoin trade. Someone lost $9.7 million on a single trade. Big ouch, big ouch. Let's refresh the CNBC chart and look at the TradFi here. If you guys don't know, Target had earnings this morning and got absolutely slaughtered. 10% drop on their missing their earnings this morning. But the Dow Jones right now down about 0.25%. S&P down about 0.9%, almost a full percent downside there. And the NASDAQ tech sector seeing some hits right now, down 1.73% on the daily. Michael's nose job. No, that's not Jackson's hole. Dutchy, I swear, man. I love you, bro. NASDAQ guys, Palantir since August 13th, a week ago now, they are down over 20%. So Palantir, tech sector taking some hits. That's why we're seeing that NASDAQ down that much. Russell 2K is down 0.67 today, and the VIX is over 17, meaning volatility has reared its ugly head, and here we are. So looking at the Europe markets overnight, they were mostly green. Asia markets overnight, Nikkei was down. That's the Japanese market. Everything else was green there. Nifty 50, India, Shanghai, all that. Bond market, looking at the 10-year yield, pulled back into 4.293 again. We are seeing a slowdown here on the yield, which is a good thing. We want this to be lower. This is what Trump has been beating the drum about on rate cuts, because he needs the 10-year yield to get lower so that they can refinance U.S. federal debt. And when they refinance that federal debt, then that means that they will be able to save money on all of the interest payments that they have to pay, because they're maturing this year. So if you don't know, now you know. Now you know. Yeah, let's go take a look over here at oil and gold. Oil sitting above $60 a barrel today. Natural gas is taking a little downside move. And looking at gold, it's moving back up towards $3,400 again, up 0.77% today. Silver up almost a full percent today, back just under $38 there. Copper is unchanged and flat. Platinum and palladium moving to the upside. Platinum in the lead today at 1.55 versus palladium's 0.94%. Crypto bubbles. Yay. Bitcoin down on the daily 1.9%. Ethereum's down 3.5. Big movers today. XRP is down 5.3%. Solana is down 2.1%. Look, stablecoins are stable. That's a good sign. Tron is down 0.9%. Doge is down down 4%. Cardano down almost 8%. Guys, losing 2 spots on the top 10 has moved from number 8 to number 10, sitting at 84 cents. Chainlink, though, is up 1.1% on the daily, despite giving back some of those gains in the past hour. Guys, Chainlink, $24.76. I can no longer say $800 Chainlink to poke fun at somebody out there with a crazy prediction. It's now a $300 Chainlink in 2026. Evidently, there is no 4-year cycle anymore, and it's going to be summer 2026. Chainlink's going to do this amazing ripoff to the upside of $300. So, not my opinion. Not my opinion. I'm stapled to reality. But yeah, some people out there are saying that. So if you know, you know. Stellar Lumen's down 3.7%. Hyperliquid down 5.6%. Other big movers here. Leo token to the upside. Native token again to the Leo token DeFi centralized network. And then Litecoin moving down 1 position to round out the top 20, down 2.4% today. Let's go see what's going on with the alt season. Well, we're sitting at 51. And again, guys, it needs to be 75 for a sustained period for us to be in alt season. The alt season index says we are not there. People keep talking about it. So he said $300 link, I'd be able to buy another house with what's left of that bag. Yeah, absolutely. I if it happens, sure. But I just don't see it happening. That's just the reality of it. So do not see that happening at all. All right. let's go and take a look here at the top 30 indicators that say, hey, the peak is in, guys. Bull market tops are in. Out of that 30, 0 have fired as of yet. And we just showed you that. The cycle, a little bit different. Again, go back over here and look at the median on Bitcoin. We haven't even gone out of our green phases yet. So it's kind of weird. It seems like the price is being very suppressed. Not saying that, composite man's at work here, but definitely not seeing the rallies that we typically get. And is this just part of the Bitcoin design that is starting to become more stable on price with the not as much upside, which also would mean maybe not as much downside? I don't know. That is the narrative out there, and we'll just continue to watch it and monitor it and play it as the cards get laid, right? So it is more reasonable than $800 link LBC. I agree. So 5 things to know this today, guys. Jackson Hole targets next CEO, Tex Market Route, and more in the morning squawk. So let's go down here and take a look. Jackson Hole 101. It's a good week to be a restaurant or a hotel in Jackson Hole, Wyoming. Economic policymakers, market participants, and government officials are descending on the town for the Kansas City Federal Reserve's annual policy symposium. It'll kick off on Thursday. Friday morning, we get Jerome Powell speaking. So CNBC's coverage of the meeting begins today, and they'll feature live interviews, central bank officials. Great. That's fantastic. We'll talk about it here on the show, too. Powell's remarks come amid rising speculation about who will succeed the Fed chair when his term ends May 2026. That's when we'll definitely get rate cuts, right? Treasury Secretary Scott Bessent told CNBC on Tuesday that interviews for Powell's successor would start after Labor Day, and then the Fed on Wednesday will also release minutes. That's today, 1 p.m. my time, 2 p.m. Eastern Standard Time. Those minutes will be dropped, and people will be looking through that with fine-tooth comb, looking at the minutes from the FOMC the last FOMC, and it's the actual detailed transcript of everything that they said at that meeting. So people will be going through it, trying to glean what exactly took place with that dissent between 2 of the Fed Reserve members that voted for rate cuts, right, against the entire team. So Target's top job. They got a new CEO. They also had a 10% drop today in pre-market, even though they beat expectations on the top and bottom line for the second quarter, getting a 10% sell-off there. Tech's tough day. Tuesday was a rough day for risk-on assets like cryptocurrencies and technology stocks. The tech-heavy NASDAQ tumbled 1.5%, and every member of the so-called Magnificent Seven index of mega-cap names posted losses, guys. As for crypto, digital cryptocurrencies like Bitcoin and Ether pulled back sharply on Tuesday's session, just days after Bitcoin touched an intraday all-time high last week. Stock futures were lower on Wednesday morning, so this morning those futures a little bit lower, given the indication that, hey, people are expecting it to be on a downside move for a little bit longer. And then pedal to the metal, White House expanded its 50% tariffs on steel and aluminum to include additional product categories. So the Commerce Department on Tuesday said an additional 407 types of goods now fall under the levies, including everything from car parts to specialty chemicals to fire extinguishers. CNBC's Aaron Doherty notes the move increases both scope and impact of the tariffs. So all of that hitting the markets also today, guys. That's 5 things you need to know today in the market. Let's go over here and take a look at what they're talking about in those Fed minutes, guys. They'll be looked at for clues on policy and politics. Normally, a united group, Federal Reserve officials suddenly find themselves divided on the last FOMC, whether they should have cut rates or not. And how deep those divisions run will become much more clear today when the FOMC minutes drop. So that is one of the things that people are watching for today. Just so you know, top 5 things to watch. This is one of them. However, that decision came with 2 dissent to keep those rates the same. 2 dissenting members of the board, that would be Bowman and Waller, they voted against the final statement. And so people are going to be looking to see how hawkish or dovish, what really was in the details that did not get said at the speech at the FOMC. 30-year mortgage came out today, guys. It went up slightly, 1.01% to a 6.68. We are not seeing a pullback there on the 30-year fixed rate mortgage. That has to do again with that bond that we just showed you when this was up at almost 4.4 again. That is what is the deciding factor for this fixed rate mortgage, it went up a little bit. So this went up a little bit. Today, there's minutes coming in, 2 p.m. Eastern Standard Time. I know it says 1 p.m. here. I'm Central time frame. This is going to be at Eastern time frame at 2 p.m. So be expecting a little bit of stuff going on there tomorrow. Or this afternoon, I mean, with volatility on the markets. And then also the Jackson Hole Symposium starts today. However, that will not start until Federal Chairman Jerome Powell's speech at 9 a.m. my time. That's going to be 10 a.m. at the end of the show on Friday. He starts speaking, and that's where we're going to get all of that data out of the Jackson Hole Symposium. Of course, tomorrow, guys, we're going to get initial jobless claims. This is going to be our weekly unemployment. Right now, it's expected to be going up. That means weakening labor market. Oh, Berkoshi No Dinero, welcome to the alumni, bro. Appreciate you joining us, man. And then also down here, existing home sales, we're going to get that going on tomorrow. So that is what we have going on the rest of the week on the economic front, guys. The macro front, looking here at the chance of a rate cut right now for September 17th. We're coming up on that in about 27 days, somewhere in that ballpark. That is an 84.9% chance right now of a rate cut, 15% chance that we do not get a rate cut in September. So liquidations, let's talk about those, and then we'll take a look at the charts, guys. This is the max pain chart for liquidations, longs versus shorts. So people that are longing, this would be the max pain for liquidations for them. And if people are shorting, then they would also, that would be their max pain. So short max pain, the liquidation level that would cause the most amount of liquidation pain on short traders right now is $119,944. On the long side, we're looking at 111,881. OC and I have been talking about 110 now for well over a week. Before, when price was up around 120, we were talking about 110, guys. So if you've been here tuned into us, we look at the long game. We don't look at the 5-meter target and say scalp the short right now. We tell you where price is heading overall in the midterm, and we have been nailing it here. So shout out to OC, dude. 110 coming in very quick. It's about 0.37% here for 111. So I do think that 110 market, will take a look at what those levels look like here in a moment. Looking here at the liquidation heat map, we did have this nice big cluster. Well, when it pulls back up, we did have this nice big cluster of liquidity on the heat map where the market movers might be trying to get the price to so that they can grab that money. Grab that money. Yeah, this is where it was at yesterday. And we talked about these levels down here. We're starting to now clean that out. We did a little pump up, came into resistance, and now back down. This money flow, by the way, for targets comes all the way down into $110,450. So definitely watch all of this liquidity sitting down here to get cleaned out, looking at the 2-week heat map. We are sitting in a red August still. Typically in a halving year, 2021, 2017, we usually have a July, August that is both green. You can see that there. You can see that there. Right now, we're down 1.94% in August. If we have a red August, it could mean we have a green September, but really at this point, guys, we have to consider that this cycle might be a little bit offset, like we've showed you on the Bitcoin dominance chart or in the Bitcoin money chart. It hasn't even left its ranges that it typically does in a bull cycle. So right now, though, on the monthly losses, down 1.94% for the month. Yeah, we'll talk about this one and then we'll get into the chart. Bitcoin Ether ETFs posted almost $1 billion in outflow as price slides. Spot Bitcoin ETFs outflows jumped over 300% on Tuesday, while Ether ETFs doubled their losses to $422 million. That's about $1 billion, guys. $533 million in Bitcoin, $422 million in Ethereum, adding to a 3-day streak of withdrawals. Cryptocurrency investment products expanded those losses on Tuesday, moving into overnight. And Bitcoin and Ether funds have posted 3 consecutive days of outflows, totaling $1.3 billion, coinciding with a sharp price correction of 8.3% for Bitcoin, 10.8% for Ethereum since last Wednesday, according to CoinGecko. So, OC, we're seeing a lot of flow of the money like leaving these markets right now. We're also seeing some metrics that normally, hey, we're above these levels and we're not right now. What's going on? What's going on with Bitcoin? What's going on with the alt season that everyone just keeps holding their breath for? They're about to pass out from no oxygen. What's going on with the market this year, man? What are your thoughts?
Big changes are coming. The near is the end is near. My dyslexic is coming. It's kicking in, man.
Bitcoin's going to
But
zero. Can you play that soundbite?
Bitcoin's
Bitcoin's
going
going
to
to
zero.
zero.
There you go.
You heard it here
No,
first,
but
folks.
I mean,
Bitcoin's going to zero.
absolutely. You heard it here first, folks. Bitcoin is going to zero. No, but in reality, we're seeing a lot of stuff happening in the world, especially with the global push through, right? This is not as bad as in the past centuries, right? I mean, and that is imagine what your grandfathers, your great grandfathers would have felt first on the great collapse of the stock world on Wall Street, and then what happens maybe on WW1 and WW2 to the markets, right? So far, I think big changes are coming, especially on monetary systems. It's true that the debt was not as high. And what am I kind of a feeling that I'm going off course in here if I got asked about Bitcoin, and that is because well, Bitcoin's still right now a little ah, toy playground tool, something that is not that it's not serious, but we're just getting started to play with the big actors in here, right? So I mean, if we take a look at the market cap of Bitcoin, well then we're right there with Meta. It's not a small company, but it's not up there like for example with Forex, right? I mean, the amount of money that is on Forex, which we're talking about money inside money, well, or money inside economies, that is where the big actors really start playing out, right? So when we started to compete with Amazon, when we started to compete with Apple, when we started to compete with Nvidia, when we started to compete with all of those areas, well, we're gonna be seeing now like that we're already stable, right? So we're not gonna be looking for really big changes. So going back into Bitcoin, I think we're gonna be seeing a lot of stuff, basically changes. I'm just waiting for the breakout point, and I'm gonna be talking about that breakout point in a minute. But the all season, it's broken. The cycle, it's getting to show its cracks, right? And
Hmm.
it's not that I don't believe in the cycle. The cycle is gonna be there till the end of times. There's just no way to remove that cycle. But the
Nope.
amount of money that we're getting right
Computer's going to
now,
get more difficult to do the calculation every 4 years. It's going to happen. So,
exactly,
well, every
exactly. That's
210,000 blocks on the blockchain, I guess. It's like 3 years, 11 months. You do what you will with that info. Uh,
exactly. But the amount of money that we're collecting, and that's what I want to refer with. Hey, we're just getting started to play with the big boys, right? The amount of money of influx right now, it's going to start actually just taking over the cycle. And that's exactly what we're seeing right now, right? And that has to do with a huge divergence that you mentioned that we might be seeing on Bitcoin at this point. Why is that huge divergence happening? I think we need our first Bitcoin, let's just say bubble pop. All right. So is Bitcoin a bubble? I don't think so. But is the economy of influx's bubble might be playing out? I think so. And it's just part of the economy. I mean, that happens with all hard assets, right? When we see big pullbacks, like for example, .com. .com, yes, it was a bubble, but it was also an asset value that right now, since the .com bubble burst, we have grown over 5-10 times its original value. So a big correction might be coming. We are not near from that. All right. We still need a couple of more cycles. So don't worry about it. Don't be panicking about it. And the only way that we might get that early pop of the Bitcoin bubble, and I say quote unquote pop, because I don't think that Bitcoin is a bubble, just to make sure that we understand that. Uh, but that to get that big correction is to get everything else to dump, just like for example what happened with a pandemic, right?
yep.
So far, I think we're fine. The only main characteristics that I'm seeing changing at this point is market cap and over population of cryptocurrencies, right? Altcoins.
Yeah. Way
So
too many altcoins out there for an alt
what?
season, in my opinion. Yep. Taking a look here
Yes.
at Bitcoin on the weekly, man, just to give you an idea, and we've talked about this a couple of times, but just to recap for anyone who hasn't seen all this data aggregated together, we did have a bearish weekly divergence that printed back on July 21st, and we talked about that here on the show. Like, hey, this is a big warning, guys. If you go back and look historically when we've had bearish divergences on the weekly, the last one we had, look, that would be right there. When was that? That would be back in November 2021 at the top of last cycle, right? Now, mind you, we did have a double one here. Had one that set up here back in September, the first week of September 2021. But again, that divergence led to a 26% pullback, right? Before we went up. That is where my hope is right now. I'm hoping that this divergence that we have right now is like online with this one here, where we at least you saw a 26% pullback and then went into the rest of the rally for the cycle. That's what I'm hoping for. But of course, we have to take the information as it presents itself. And as of right now, what we're seeing is we had what could have been another divergence right there. You see that? That's lower. That's higher. That's lower, right? It just didn't print on the oscillator here. And that one led to a pullback that we saw back here of that was about a 12% pullback. So we're getting lesser pullbacks, less volatile pullbacks. But we did print a weekly there on that divergence. So on that chart. Another thing I want to show, we are losing the 50-day simple moving average. We're coming into the 100-day simple moving average at about $111,000. Again, that is the max pain level for longs that we showed you. And then we have a value area low coming in at about 105. If we take a look over here, though, at this chart, guys, I am seeing something that gives me a little pause for concern. This is the bull market support band. We talked about this week. We talked about a couple of things this week. One of them being, let me pull up here. We talked about the swing fail pattern on the weeklies. Where is that at? Where'd that be at? There we go. Nope, not you. Swing fail patterns, SFPs, sir. Market tops, SFPs. Anyway, we had a swing fail pattern on the weekly here. I had it on my chart yesterday, and maybe a different chart now that I'm looking for, but we had the swing fail patterns on here. Maybe it is on this Bitcoin chart here. Let's go there and look. Maybe it's there. Swing fail patterns. No, it's not there. Anyway, guys, we had a weekly swing fail pattern that came in right here. And you can see there's your top. We came in, we broke that swing fail pattern on a weekly downside move and what those typically look like. That means that we very likely are going to try to come down to the bull market support band and see if we get a bounce. One of the things I want to point out here is the two lines on this. It's a 21-week SMA and a 20-week EMA, I think it is. Let me see here. 21-week. Yeah, it's going to be your 20-week SMA and your 21-week EMA creates the bull market support band, guys. If you want to look for that, just type in 21W and you'll see the bull market support band there. We're about to cross. And when we look at what happens when this thing crosses historically, get back over there, sir. Thank you very much. When this thing crosses bearishly, like it did here, that led to a pretty sharp pullback back here in February 2025, right after the January top that we made, right? Look back here again. We had one where it crossed bearishly here. We did a little bounce and then it came up even harder that time to the downside. So yeah, it's not a straight down line. Obviously, there are chances to get in on some of these shorts. But historically, when we do this bearish cross, it leads to a little downside, most of it occurring before the actual cross happens though, right? But if you go back and look back here, when we cross back here, it became resistant. And that's going to be the big question. Will this thing get caught as support like we saw here where it crossed, right? And get that bounce there? Or will it actually break it and it becomes resistance for the entire bear market cycle? That's going to be the big question that we have to answer, and that's going to be off of just watching it here. But watching this price come down right now, that bull market support band is coming in about 108 OC. If we come down and we get a bounce on that, that would be bullish in my opinion. And then we could be looking at what we saw in previous cycles where we get that bounce for the last of the cycle, right? that would be what I watch there. But if we come in and we break below that bull market support band and then get a rejection off of it as resistance, then we could be talking about a whole new cycle event going on here. But yeah, this weekly dynamic, weekly divergence playing out pretty harshly there. OC, let's kick it over to you. Let's take a look and see what else you got. If you got anything else on this. But if you don't, let's head into talk about some altcoins, and then we'll come back and talk about that symposium and how it could affect Bitcoin's price action.
Absolutely. If you come jump in here with me, I think I got something for you. And let me start talking about first. Let's go macro. All right, let's go macro. The point is, and let me know when you're able to jump in here because I have something under my sleeve. But here is perfect. Look at that. We got you big arrows in here. There we go. So here's where the first cycle happened, right? So right here where the first cycle happened, I have marked with those two arrows, the first hump, the second actual blow off top, and here is what we had previously, right? I mean, this last cycle when the blow off top actually did not play it out, and right here we can see the over exaggerated dead cat. And well, we can see the bear market, and then how we coming back up. Very important is that what Piper mentioned, how that divergence start playing out on the other side from the previous cycle, going through. I mean, all the way into the next cycle. Quick question, Piper. Look at my dates. Do you see anything weird on this chart? And I got you. I was able to sneak it on you. All right. Here's the trick. We are at 1975. Is that Bitcoin? No. And here's what I take, and this is the case of analysis of a, yeah, I see you smiling. So here's the thing, guys, when I talk about that I study cycles, I like it. That's something that I spend my time of doing, right? And one of the market structures that I study, it is gold. I've been referring that Bitcoin is doing the same thing that gold did, right? So it's just time to come out clean and show you how I analyze those models, right? So how that model played out on that certain time where the market cap was X throughout the institution release, right? So this is what happened. Let me show you. And I trick you because right here, there is no blow off top. And what do we have in here? It's just the first bump on gold, right? So this is the gold chart. And if you want to do the same thing that I did, you can go here and just paste tvc.gold. Gold, make sure you're on all. And it's the very first one. This is the longest existing chart of gold. And here's the thing. Whoever invented Bitcoin, so Satoshi was a genius, and he know how to pump up the markets, right? The first thing that they did, it was because we didn't have at that point an ETF, all right? We needed an artificial way to actually create scarcity and have it factor in from the beginning to the end, period. Something that you cannot move, something that actually means something. And well, that was the cycle. Added to the cycle, just creating scarcity. Like for example, I think that the DTF, both, or I don't quite remember that they were limited or something like that. Well, they lacked of something. They lacked of the actual current value. Yes, you have to pay a yacht membership, but not everybody could jump in. Instead, Bitcoin did. All right, do you have a PC? Do you have access to electricity? Do you have internet? Come in here. You're welcome. Let's get it. And then, well, it opened up the doors to everyone with a just normal PC to be able to mine it, right? So they make it easy for everyone to get started, and then they start cutting out rapidly that 4 cycle outcome of Bitcoin, right? And then, well, the rest is story. So what happening here on this market cycle, as you can see, it's very common. The only thing that we're not seeing here, it is that actual factor that I described. So there's no 4-year cycle artificially pumping up the price while also tied it to a real asset value. This is just a real asset value with mining behind it, all right? And so what happens in here, it is that we have a institutional money playing out, and look at that. It's having the exact same divergence. Now let's go and check out the actual price of Bitcoin. We have the previous pumping here, all right? So look at that little itty bitty bump, and also look at how flat the price was in there, right? I mean, if we want to talk flat, if we just go back in here, well, it's not that it's flat, it's just that the actual growth, all right, of Bitcoin has been so parabolic. You see that? That you just need to compress it that much to actually have that spike. Let's go back to gold. The same thing happening here. It's not that it's going parabolic. Well, sorry, it is that it's going parabolic, that you just need to compress the price action in here so much that you can see the rest of the price action, right? So this takes me to talk about the stock to flow index. Interesting here. I want to cross-reference with what Piper have there, which are all of the bullish indicators for topping indicators, because this one right here, look at that color, right? It's pretty yellow to me. And after that yellowish, and I think that we are this shade of yellow, all right, so we still need to go a little bit higher, right? Then we start going down. Important. Right now, we're in that sort of yellow. I think we still need a little bit more yellowish and then start going down. But look at how the price of Bitcoin has been flattening out. Haven't you, buddy? Oh, see, what are you talking about, man? You're just breaking my brain because you just showed me how the price of Bitcoin is just not compressing. Important. That it has to do with the market cap. That's why we can click here logarithmic, and on logarithmic, we'll be able to see that shrink of that price action. All right. So here is where the model starts breaking down. We're going to be talking about this this line in here, right? And I promise I'm going to be cutting it short. What happens after we start having divergences on a bull run? Well, we either range to break the divergence or have a correction. So where are we? Where I believe that we are on the cycle. I believe that right now we are right here. And I believe that, and let me compare something, that this range, all right, could have been this range right here. And once again, we are there, all right? So with the two tops, the blow off top, the double thing coming back down, little range continuation. So what do I think it could happen? And this is where I took one of the bases for me to go over the 500K Bitcoin analysis. Again, out of all of the possibilities, I went for the most extreme one. All right. So here's the thing: what happens after that? Oh, oh, oh. So I think we're going to be seeing the same thing over and over, and we're going to get back at a blow off top. And why is that? Well, it's not actually a blow off top, but it's going to be looking like a blow off top within a, well, Adam and Eve, inverted Adam and Eve. And then at that point, it's where we might be having the big Bitcoin correction, the first actual bear market in Bitcoin in price, not in actual market cap, if that makes sense. Why? Because if I take this in logarithmic, you'll see that this retracement is almost equally, all right, as big as this one. And you will see that that one is, well, as big as, well, in this case, it doesn't work, but that previous one. So I believe that the case of study will show us that we're still going to be breaking that trend, that divergence, and that divergence represent the fight of the market cap range, all right, over the pressure of institutions. So if it's this too advanced for you, I just think that we need to break with strength, and then we're going to have that break or crumble of the market. That doesn't mean that we're going to be doomed. It just means, and let's go to Bitcoin terminology, it just means that we are still going to be having the same as always retracements, right? So nothing scary, but I mean, if we talk about percentages, in fact, if we just translate that to logarithmic, we're going to be seeing the same size correction over time as we shrink down, even maybe a smaller correction, But if we turn off logarithmic, we'll see that that correction, look at that, how big of a line it became. You see that? How big of a line? Let me do it once again. Look at how this line in logarithmic is. It's measuring this drop. And if I bring it down here, look at that size, all right? If I turn off logarithmic, look at and see how big of a drop that represents. For us to have that drop back to these areas right now, where I believe that we're going to be having, this is going to be the bear lows, all right? That means that our target, it's going to be somewhere around 176 or 180. And here is where we cannot take a one-to-one growth between gold and Bitcoin because they are different assets, but we can speculate based on how things are playing out. And this divergence is just one of those many case of studies on this pattern following from gold. So if you want to foresee the future of Bitcoin, come check out the gold chart. And just for reference, you can start looking at the 74-year right here when we have what I believe a one-to-one, quote unquote, all right, one-to-one correlation with Bitcoin with this meaningful high, all right? So that is it for me on Bitcoin. I'm not going to be pushing into it. I can talk about this over a century. I love it. I love it.
You're such a nerd. I love you, OC. It's interesting that you talk about those pullbacks. It was $70,000 anywhere in those levels that you looked at? Was that 70,000 range?
Yes, 60,
Oh,
60
nice.
and 80. Between
Okay,
60
cool.
and 80.
So let's talk about that, shall we? Let's go and talk about what will get us down there to those levels. But first, let's talk about the Jackson Hole Symposium and the history of Bitcoin during the Jackson Hole Symposium, is what we could see on that. Let's go to this chart. There we go. Check it out. So how will the Jackson Hole Symposium affect Bitcoin? The team over at Banter, I don't always, I don't always agree with Banter's showing, but they do have some good analysts over there. I work with a lot of those guys, and they're really good people. So, how will it affect Bitcoin? We gathered data from the past 8 years to calculate the average Bitcoin movements after Jackson Hole. In dovish years like 2019, 2020, 2024, Bitcoin rallies strongly after dovish pivots, but often takes more than 30 days to show it. So you don't see it immediately, right? Average move after 30 days was negative 1%. Average move after 60 days, positive 2.1%. Average move after 90 days was 34.1% upside move. In hawkish years, which I think we could see that this week, 2017, 2018, 2021, 2022, and 2023, we saw weak or negative returns at the 30 days, but strong cycles like 2017 and 2023 can overcome Fed headwinds later. So average move after 30 days was down 5%. Average move after 60 days was up 16.3, and after 90 days it was up 21.1. Right now, Bitcoin is sitting at the low end of one of its two big trading ranges, as you can see below. So range 1 and range 2. So that's what they're talking about there. 5% pullback if they're hawkish is what we could see in that 30-day window, which would set us up for a negative return month on August. But let's go talk about this here. We talked about this chart earlier this week from the Chart Prime analyst, and they had this thing called money flow POC. OC had this pulled up on his chart even to show it. And so he did. The money flow POC acting as a long-term magnet for the pullback, guys. That's coming in right above $69,000. That's what OC was just showing on his chart over there, right? Let's go talk about this, though, because that's not just beyond that algorithmic indicator that we saw there from Chart Prime, the money flow POC. Here are Bitcoin's biggest support levels ahead. Will Bitcoin drop to $70,000? This came out this morning. We were talking about this level on Monday. So let's see here. Too long didn't read. We're just going to it. Bitcoin was trading below $114,000 at the press time, down 5% over the past week after reaching a 24-hour peak of $117,000. The price has pulled back slightly as the market enters a period of consolidation. Crypto analyst Ali Martinez shared an update on Bitcoin's support levels based on the MVRV pricing bands, which measure how far the current price deviates from the average cost basis of holders, meaning the average that people that bought Bitcoin bought theirs at that average hold price. measured from the current price and the deviations from there. Based on this model, the next major support levels are at $112,800. Okay, there's one. $91,400 and then $70,000. These are the levels where Bitcoin has historically found strong demand during corrections. At the time of analysis, Bitcoin was trading between the 0.5 band at a 112,830 and the 0.1 band at 134,20. This range is often seen during elevated but stable conditions in the market. So, and here you can see the MVRV. Sorry for that brightness there, guys, but I can't change the color on this. MVRV extreme deviation price bands. You can see we're up here in between this orange line and the red line right now. The line that they're talking about at that $70,000, that's going to be coming in at $69,992. That's the green line all the way down here. And you can see historically, we can pull back to those levels during pullbacks and corrections. So the RSI divergence and trend shift signs also on the technical side. Martinez noted a pattern forming on the weekly RSI where the prices continue to rise and the RSI making a lower level. Again, that is that deviation of or divergence, I should say, that we pointed out on the chart prime indicators too. So $70,000 Bitcoin could absolutely be in play, but it's not going to be an immediate thing, in my opinion. I think we're going to see that maybe in the bear cycle if we do break down below the bear market support band and get that rejection there. That would be the indicator that could be coming. Also, if you throw on your chart prime market Oracle, where's my Oracle? I don't even have it on here. There it is. Oracle Pro Plus, you can see that right there coming in line with that also is our dynamic reactor also, meaning that volume levels are coinciding with what we're seeing on the bull market support band moving averages. So $100,000 Bitcoin, very likely 108, that 107, 108 coming in right here on this bull market support band. And then ultimately that $70,000 level. Where is my chart here? Let me see if I pull it up on here, because I do have something on this chart that might have, although like there's no swing fail patterns. Found it. Bitcoin pullbacks. If we take a look at this, this would put it down to around $98,000 on the typical pullback from swing fail patterns. But there's also another chart that I have that has the fib levels, right? Bitcoin bottoms. I think that's going to be on here, and I think it's going to be on there. We're going to go look for Bitcoin bottoms here real fast, because based on trend-based bottoms, there we go. Bitcoin bottoms. There we go. Perfect. Got it. Based on Bitcoin bottoms, guys, and I don't think this is what's going to happen. It's just something to point out. If you measure on trend-based fibs, pulling from retracements, not trend-based fibs, just Fibonacci's. If you measure from bottoms to tops, for pullback, like bottom to tops, right? Every cycle, bottoms to tops. We've always gone down to the 786 historically. Okay. If we were to have a repeat of that for a 786 pullback from where we are currently, you can see that dot right there. That's measuring this recent high that we had. I mean, that one's coming in at 39,000. So if we're talking about historically where we pull back to being a 786, I think if we pulled back to $70,000, I'll take that.
Oh, sorry. I was waiting for you to finish. Sorry, but yeah. Oh, are we okay? Are we all right?
I don't know. I've got a delay.
Oh, I see. Perfect. All right, so that's so funny. But all right, guys. I mean, I think that it comes into clutch what we've been looking into. I mean, if you go back and watch previous weeks, not only let's go. Not only we were talking about that 60K, 70K. Remember that we've been pounding on it. Remember at first 100K, 90K, and 60 to 80K, which is between 60 and 80. That's right there, 70, right in the middle. All right, so
yep.
I think. Man, I don't know how we're not on CNN or CNBC. Sometimes I.
because we're not pretty enough. That's why. We're not pretty enough to be on there. That's okay. We'll be right here at the Piper Academy talking to the alumni all the time, every day, Monday through Friday, guys. That brings us to the end of the show, guys. I hope you guys got something out of today. We're not trying to scare anyone. We just want you guys to be prepared. Be prepared, not scared, and just continue the DCA plan. I mean, honestly, it crushes it over time. You're never going to go wrong. And then we have a profit-taking plan. You can get all that in our Discord. So, OC, I know you got to head over to Chart Prime class. We'll go ahead and get you out of here, but I appreciate you being here, guys. If you haven't done so yet, smash the like for OC, and maybe next time he'll be even more nerdy as a thank you for that, and share it out with a friend. If you got anything off of it, OC, appreciate you, man, and have a good one. We'll talk at you later. Guys, appreciate you all joining us here today on the Piper Academy Network. We're going to be back here tomorrow morning, 10 a.m. Eastern Standard Time, breaking down the news, the charts, the markets, and everything you need to have knowledge. Make sure you tune in and catch OC Guy at 8 p.m. Eastern Standard Time with Trade Live with OC. And then tomorrow morning, BC Port Corp will be back with Good Morning Crypto pre-market show. We'll be back after the market open, 10 a.m. Till then, guys, trade safe, use some risk management, and as always, peace, love, and profits. Later, guys.
We'll see you at the We'll see you at the next one. Morning market report. We'll see you at the next one. Morning market report. Ow.
That was awesome, dude.
Hey, it didn't break. What else you got?